Good evening, participants. I welcome to you all on today's webinar on audit quality, auditors and audit committee. On the behalf of Chairman to the Corporate Laws and Corporate Governance Committee, CA Dr. Debashish Mitra sir, the Chairman to the committee as well as the past President of ICI, and also a Chairman of Expert Advisory Committee, and on behalf of Shri Priya Kumar ma'am, the Vice Chairperson of Corporate Laws and Corporate Governance Committee, welcome to you all in today's webinar. We are also having with us the eminent faculty, CA Anil Sharma sir with us. If I talk about the sir, it's a very least briefing about the introduction of the sir. He is a practicing chartered accountant. He's having more than 35 years of experience and has also participated in a special invited to various forums as well as in the National Advisory Committee on Accounting Standards under the MCA, as well as reviewer and faculty with the Financial Reporting Review Board of ICI. He has also acted as an ex-member of MCA Committee on CARO 2003, co-authored Corporate Anti-Bribery Code issued by the ICSI. He is independent director and director on the board of various reputed companies. He is also invited to various committees formed by the MCA. He has been invited as a faculty with IICA, ICLS Academy, SFIO, ONGC, SEBI, and other reputed institutions. He also acted as a co-opted member, special invitee of the following committees of the Institute of Chartered Accountants of India in the different years in the past. He is also a member of NAFRA. Since founding, sir has been there into various, you can say he's been there as in various forums. He has given his valuable contribution to the Institute of Chartered Accountants of India. And on the today's topic, the sir shall be talking about the audit quality, how the audit quality plays a critical role in ensuring the transparency and the reliability of financial reporting. And the auditors who are primarily responsible for ensuring the reliability, transparency, and accuracy of the financial information. And how does the audit committee plays a pivotal role in ensuring the effective corporate governance and enhancing the credibility of the financial reported in the corporates. So with this, now I would like to sir to take up the session and to just enlighten us with this topic, with this expertise experience. Now over to sir.
Yeah, thank you very much, Nishaji. First of all, my term with the NAFRA has completed. So I am a past member of NAFRA now. So that's one change which you have to do in my introduction. Okay. So see, very interesting topic which has been chosen by the CLCGC, that is on the audit quality, and with the special reference to auditors and audit committee. See, and then because of so many reasons, so many provisions, this relationship is so important, and all types of provisions are there. One point, since NAFRA's name came up recently, maybe I think a months back, NAFRA chairman made a public comment. He gave a statement that they are likely to go to the committees, audit committees of the listed companies. In addition to, they are going to the auditors of the listed companies. So, and that's the reason, because if you look at the provisions, which I'm going to explain you in detail, that audit committee in the company is also entrusted with so much responsibilities that virtually if auditors communicate with them properly, then see, so many problems will get resolved. So, and in fact, when I was preparing my presentation for this, so there were some new ideas came up. which also I am going to discuss uh, during my deliberation. So let me share my PPT, and then based on that, we will go further.
Since our chairman sir has joined the session, so I would like to just welcome the
Please,
sir.
please. Go ahead. Go ahead. Let him also
Good
speak.
evening, sir. A very warm welcome to you, sir, on this today's webinar. And since we are having with us the chairman to the Corporate Laws and Corporate Governance Committee with us, CA Dr. Debashish Mitra, sir, he will enlighten us with the topic. Today's topic is very important from the point of view of the chartered accountants. Yes, the audit quality, auditors and auditors, audit committee. So now over to sir to please enlighten us.
Good evening,
Thank you
sir.
very much, Dishaji. And Sharmaji, Sharmaji, let me tell you, has been a very big friend of the Institute. He has been helping the Institute in various ways. And to all those who are listening, a very good evening to all of you and welcome on behalf of the Corporate Law and Corporate Governance Committee of the Institute. We have these webinars on a regular basis. The last webinar that we had was on fraud. Today, we are having audit quality. And you know, at the Institute, we have this Center for Audit Quality. And we are doing everything possible to enhance the quality of the audit. Now, those of us, who are, carrying out audit, you must note that we have this auditing standards. I believe we have 46 of them. And it is so very important that we follow these auditing standards when we carry out the audit. Because at the end of the day, although you can say that, look, I'm giving a true and fair view, right? But the expectation is always that you cannot compromise on the quality. So it becomes so important that audit quality is given due stress. At the Institute, we are totally committed to maintaining and enhancing the quality of audit. And that's why a person of eminence like Anil Sharmaji is come and sharing his thoughts with us. Now, audit committee, very important. You see, all the auditors are part of the audit committee. Certain select companies are also required to have audit committees. And let me tell you, that this committee is now under lens, more than the board regarding the financial statements and audit. Because the feeling is, how much scrutiny has the audit committee done? And here, the independent directors, usually the chartered accountant independent directors, they head the audit committees. So it is so very important that the audit committee performs its role to the best of its ability. And let me tell you, in the past, we have organized, this committee has organized programs on independent directors. And audit committee and its roles, we had organized a program in Ahmedabad, we had organized a program in Mumbai, where we discussed about the roles of the independent directors and audit committees and the importance of audit committees. Now, the CLCGC Corporate Law and Corporate Governance Committee has also got out a publication on audit committee. Have a look at that publication. We also have got a publication on women directors. Have a look at that, right? So, today, there is no alternative to updating yourself. I have just come, I was a bit late because I was, I also chaired expert advisory committee, and we were having discussing opinion relating to a very big government company and which involved very complex issues. And the discussions led to one opinion, it took the discussions more than 2 hours, 2 or 3 hours, and some of the best brains in the country were involved in dissecting that issue and trying to give the right opinion. So the point I'm trying to make is that to us at the Institute, maintaining quality, extreme great importance, and it is in this direction that we are organizing webinars such as these. And people like Mr. C and so many others, they do such a great work for the profession by sharing their knowledge with us and ensuring that we excel in our professional pursuits. With these words, I wish all of you the very best, and once again thank Sharmaji for having taken time off his busy schedule to share his thoughts with us. Thank you very much.
Most welcome, sir. Thank
you. Ishaji, you may now continue. You may, yeah, please. Thank you.
Yes, sir.
Okay, so the point which I was as making with regard to audit quality, and then with specific reference to see interaction between auditors and audit committee. See, as you have seen these days, whenever there is a corporate failure happens or any scandal is exposed, there is always a lot of blame on audit. So they are saying that auditors have not done their duty. But is it really the case? Is in number of cases, and in fact now there's a lot of studies which are, I see now, pointing out that companies do not fail because of poor quality audit. They actually are relying audit. Is designed to enhance confidence in financial reporting, because that's what the stakeholders feel, that once the accounts, the financial statements are audited, they are credible. But finally, the preparation of account, presentation of financial statement is the responsibility of the management. And from that point of view, I would say that audit does not relieve management or those charged with the governance of their responsibilities of preparing and presenting credible financial statements. So it is a blame game, but if you really look at the entire structure, how things are happening, how the law is there, and if we really try to see see that provisions of those laws, we can very easily find out that corporate failures and see their resulting impact on financial statement is primarily because of the poor governance and their bad decisions, rather than on the poor quality of audit. Of course, there are a number of judgments, or I would say findings, which are now coming up from NAFRA also, where they are saying that auditor has not done the duty. So I'm not saying that in all cases auditors are doing their job, but of course in some cases there is some problem also. But primarily I would say that when a company fails or when a scandal is exposed, then one has to really look into in deep that who was actually responsible. And most of the time it is, if we really analyze that, you will find that it is the result of poor governance. It means that on the part of the management or those who are charged with the governance, so they have not done their duty, so therefore things have gone bad. So with this basic understanding, or I would the practical experience, let's look at the point which topic today. We have the relationship between auditors and audit committee, and the ultimate is how to improve audit quality. So to look at that, let us first analyze what audit committee does. What is the role? Who are behind the audit committee? How those audit committees are formed? And what is the mandate of audit committee? And how do they really operate? And what are the mandatory areas which they must look at? And all these points are there. And then you will find that in under the Companies Act, as well as in SEBI LODR regulations, there are a number of places where it has been mentioned that auditors and audit committee will interact. And once they interact, so they have to see, if they work together, audit quality will definitely improve. So let's first look at the provisions relating to audit committee. So as you can see that board of a company actually acts through its committees, and some of the committees are mandatory in the sense the company, the governing laws, you see, define that some of the committees have to be there, and some are voluntary, where companies, the board decides that they form new committees to carry out certain works in a more appropriate manner. You see, the idea of this, so audit committee is one of those committees which are mandatory. So I'll explain you the the legal provisions of that. But the idea of the committee is, see, when a board meeting happens, then sometime it doesn't have sufficient time to look into the so much business which is required to be transacted in that particular board meeting. Sometime, if you look at some of the big corporates, their agenda runs into 100 to 200 pages, and they have to carry out that, they have to take up all that agenda items within a, let's say, span of 3 to 4 hours. So that is the reason why committees are formed, and in fact that is the reason why legal provisions has been, statute has provided that some of the committees must be there, and audit committee is one of them. And and it has been thought fit that audit committee is essential for good corporate governance, because then it will look into the financial reporting, internal controls, and of course external audit functions also. So from that point of view, this audit committee is the work which helps the board to carry out its business in a more efficient manner. Now you can see here that almost, as I mentioned to you, it's a mandatory committee. Section 177 of the Companies Act requires an audit committee to be formed. Then Regulation 18 of LODR 2015 has a detailed requirement with regard to audit committee. Similarly, in the case of a central public sector enterprises, the DP guidelines on corporate governance is also there, which is referring to who will be the audit committee members, and what are the terms of reference of audit committee in CPSCs. Similarly, in the case of banking companies, if it is nationalized bank, then there is this Acquisition and Transfer of Undertaking Act, as well as Nationalized Bank and Management and Miscellaneous Provision Schemes. These are the one which requires those banking companies to have audit committee. So these are broadly the legal provisions which are there. Now, quickly, let's look at those provisions, especially the Companies Act, and in the case of a listed companies, the LODR provisions. First, that Section 177 requires that every listed public company and specified companies, they must have an audit committee. And those specified companies have been specified through Rule 6 of the Companies Meeting of Board and its Power Rules 2014. And then it has to be read along with the Rule 4 of the Companies Appointment and Qualification Director Rules 2014. Now, the gist of these two rules which I am referring to is that a public company having paid up share capital of rupees 10 crores or more, or a public company having turnover of 100 crores or more, or a public company having in aggregate outstanding loans, debentures, and deposits exceeding 50 crores. So these are, in addition to every listed public company, these are those public companies which are required to have a audit committee as required in Section 177. Section also specifies who can be the what will be the composition of audit committee. So section says that audit committee shall have minimum 3 directors as members. So independent directors shall form the majority, and majority of the members, including the chairman, shall be person with ability to read and understand the financial statement. A lot of thrust has been given on this aspect, that majority of the members and the chairman shall be a person who's having ability to read and understand the, because see, this is one another area which is very close to my heart, where I have interacted with a lot of independent directors, those who are not from finance or commerce background. So for them, understanding financial statement is a difficult task. So I mean, all chartered accountants know. Sometimes they don't know even what is assets and liabilities, and what is debit, credit, and all those things. Anyhow, that's the point is to looking into the mandate of the audit committee. The section requires that a majority of the members should be those who can understand and read financial statements. But when we look at the for the listed companies, listed public companies, then Regulation 18 of Listing Obligation and Disclosure Requirements Directions 2015 has specified more strict provisions with regard to audit committee. It says that audit committee shall have minimum 3 directors as members, at least 2/3 of the members of the audit committee to be independent directors. Section 177 says majority. Regulation 18 says at least 2/3. So it has enhances the the participation of independent directors into the audit committee. And it says that all members of the audit committee to be financially literate, and at least 1 member shall have accounting or related financial management expertise. Chairman of the audit committee shall be independent director, and company secretary shall be the secretary audit committee. So here you can see in section 177, it was majority of the members should be financially literate. The different words are used. But in the case of listed companies, Regulation 18 requires that all members of the audit committee should be financially literate. And so these 2 terms, financially literate and accounting or related financial management expertise, these 2 terms are defined in that regulation itself. So financially literate, it says that he is able to read and understand basic financial statements. And basic financial statement is like balance sheet, statement of profit loss, and statement of cash flows, etc. And in the case of a member, the chairman, like at least 1 member has to be accounting or related financial management expertise having. So who is considered to be having that type of expertise is that if he or she possesses experience in finance or accounting, requisite professional qualification in accounting like chartered accountant, and any other comparable experience or background which result in individual's financial sophistication, including being or having been a CEO or CFO or other senior official with financial oversight responsibility. If he has already carried out those kind of responsibilities in any company, then like CEO and the CFO and any other, maybe let's say we can say director of finance or something. So those have already gone through and seen financial oversight, what is how finances work in a company. So therefore, they are considered as having accounting or related financial management expertise, and can be, that is the requirement of having at least 1 person with such qualification in the audit committee of a listed public company. Now coming to the mandate, what audit committee is required to do? These are basic things which Act provides, and board can further delegate some of the powers if they feel to the audit committees. But but they have to see that there is no conflict of interest. Especially we have seen in banking industry, the audit committee person who is member of audit committee cannot be a member of the management committee, because management committee approves the loan and audit committee looks into the process, whether those loans has been sanctioned with the due process. So from that point of view, that aspect also comes into play. Section 177 describes very specific duties for the audit committee, and it says it will include. So it's like an inclusive duties. It means there can be more also, as I mentioned to you. So first, if you look at some of these duties, then you will see what is the linkage between auditors and the audit committee. First, it says the recommendation for appointment, remuneration, and terms of appointment of auditors of the company. So that's the first where they have to interact with the auditors. Review and monitor the auditors' independence and performance and effectiveness audit process. So they would be discussing with the auditors, see how they are going to do it, and they would also review and monitor the auditor's independence as well as their performance during the course of the audit also. Then examination of financial statement and the auditor's report thereon. Evaluation of internal financial control and risk management system. Approval or subsequent modification of transaction of the company with related parties. Scrutiny of intercorporate loans and investments. Evaluation of undertaking of assets of company where it is necessary, and monitoring the end use of funds raised through public offers and related matters. Why I may see just read these points, because just to bring to your notice that these are those points which auditor is supposed to take up and handle in a very, very specific manner while conducting an audit of a company. So, for example, evaluation of internal financial control and risk management. That's the first thing which auditor does before he starts his audit process. Similarly, relating to related party transactions. So auditor has to look at whether the related party transactions, which is the Section 188, has been complied with or not, and then after also looks into whether related party disclosures has been properly made and all those things. And similarly, intercorporate loans and investment. Now you can see that how much reporting is required, especially in CARO 2020. So very specific comments auditors are required to give. Similarly is the case of monitoring the end use of funds raised through public offer and related matters. Auditors are now required to specifically report where the funds has been used, whether they have been used for the same purpose which has been disclosed in the offer documents, and if not, then the auditors are required to so qualify. So what I'm trying to say here, these are the duties of the audit committee, and the same duties you can see on which auditors is also required to report. So it means that auditor has to interact with audit committee to first of all to understand what are their observations on these points, and then of course they would also be doing the their verification part, and based on that final report will come up. So so the very first point which I mentioned about was the appointment and remuneration and the terms of appointment also. So audit committee is supposed to do that as if Section 177 is applicable to a company. And similarly, you can see LODR has given a very, very exhaustive role to the audit committee. And frankly speaking, when you go through Schedule 2, Part C of that Schedule 2, you will be surprised to see how much work is required to be done by the audit committee. And in fact, I was just trying to map what auditors does and what audit committee does. So audit committee also is supposed to carry out virtually. Of course, they don't uh, do themselves, but they ask the management to see. They ask the those who are charged with the governance that how things has done on these particular matters. So for your convenience, I have bifurcated some of these matters into heading wise, so that will help you to understand the various information which is required to be verified by the audit committee. And then we will see that how it is getting linked to the auditors while auditors are carrying out the the audit of that particular company. The very first thing you can see here, duties of audit committee under regulation 18. First is appointment and remuneration of auditors. So there are two very specific points which are there: recommendation for appointment, remuneration, and terms of appointment auditors of a listed entity. So this is same as has been given in section 177 also. So, but the second point is important here: approval of payment to statutory auditors for any other services rendered by the statutory auditors. As you know that there are a lot of services which a auditor cannot provide as per section 144. There's a list of, but what are those services which are permitted, which statutory auditor can provide? So, but as per the requirement of regulation 18, those can only be provided by the auditor if, first of all, they are permitted to be provided under section 144, and secondly, they have been approved what kind of remuneration, what kind of fees will be paid by the audit committee. Only then statutory auditor can carry out or render those services to the company. Now, I would just like to add one more point here, that though this point is there, but the trend is, which is now even NAFRA is looking into it, is that statutory auditors, they are expecting, I mean, of course, the provision is not there at the moment, but their expectations are that statutory auditors should not be doing any non-audit services to that particular company. That is the mindset of NAFRA now, and they discourage, or in fact they look into, whenever they are investigating or examining the financial statement or auditors performance in respect to a particular company. They are looking into this aspect, that what are those additional payments which has been made to statutory auditors for other services, whether those can be taken up, and how it is to be interpreted, whether those are management services. And of course, section 144 has to be seen in that respect. And if they have found that so one important point you must keep in mind, that though this is duty of the audit committee to approve payment of statutory auditors for any other services rendered by the statutory auditors, it does not mean that they can approve any, they can approve payment to statutory auditors for any services. Of course, they have to comply with section 144. So they have to see that 144 is not, there is no contravention of that. And only once that is not there, only then they can approve it. So this is one very important regulation provision in regulation 18 with regard to appointment and remuneration of auditors. The second thing which Regulation 18 requires, again, I have clubbed them. See, they are not in the same order if in the regulation, but I have clubbed them to just to understand what are the, so now these are relating to auditors' performance before they start the audit and after the audit has already started. So audit committee is supposed to review and monitor the auditor's independence and performance and effectiveness of audit process. They would be discussing with the statutory auditor before the audit commences. What is the nature, scope of audit? And then they would also be looking into post-audit discussion to ascertain if there is any area of concern, then they would be discussing that. And they would also be reviewing with the management whether the statutory auditor has done their job and what is how their performance, have they performed properly or not. And based on that, of course, then they would take further step, which is with regard to the reappointment and all those matters. So this is the two parts on the auditors, I mean, their appointment and remuneration, and second about their performance and review of their performance and as well as the scope of audit. Now, this is those provisions are from one side, which is for the audit committee. But similar provision can be seen from auditors' side also. And for that purpose, I would refer you to section 139(1), read with the rule 3 of the Companies Audit and Auditor Rules 2014. Section 139, subsection 1 prescribes that every company in the annual general meeting, they would be, the auditors will be appointed by the general meeting, and that would be for 5 years. And then and rule 3 prescribes because section says as may be prescribed. So that prescription has come through rule 3. Rule 3 is a very detailed rule where they have prescribed the manner and procedure of selection and appointment of auditors. And this is, it is in the rule itself, it is mentioned where the company is required to constitute audit committee, then this job will be done by the audit committee. So you can see here section 143 and their regulation 18 now are matching. Regulation 18 says that auditor has to be appointed. And here from section 143 and rule 3, it says that auditor, how auditor will be appointed. So that's these provisions are relating to auditors. Those provisions are relating to audit committee. But there is a clear cut, what you call it, there is a smooth provision from both sides. There is no conflict. So it says that committee shall take into consideration the qualification, experience of the individual, and then based on that, they would look into their see whether the experience they have is commensurate with the size and requirement of the company, and then only they would also be looking into whether that firm is there any any proceedings which are disciplinary proceedings are pending against them in the institute or any other competent authority or any court, then they would also be considering that. And then based on that, the audit committee shall recommend the name to the board for consideration to the members in the AGM for appointment, because finally the appointment has to be done by the general meeting. So the step is audit committee will recommend to the board and then board will recommend to the members. That is the process. But as and when audit committee suggests that such and such firm can be appointed, they would be, the board may or may not agree. If board doesn't agree, then they have to send it back to the audit committee and if to reconsider it. And if audit committee doesn't change its recommendations, then board has right to record the reason of disagreement, and then they can take the final call for recommending who will be the person to propose to the members of the company for final appointment. This is the process where in Rule 3 about the appointment and about how audit committee is involved into the appointment of statutory auditors. Similarly, you can also see in the case of section 139 subsection 2 read with Rule 6. Now here it is the manner of rotation of auditors on the expiry of their term. So here it says that where the company is required to constitute an audit committee, the board shall consider the recommendation of such committee and make its recommendation for next auditor based on to the general meeting. Same process. It means for the next. Now you can see why I was referring to you about the role of audit committee when they are looking into the performance of the auditors. So after looking at the performance, they would make their mind whether they should be recommending the same firm for the next term of 5 years or not. And so from that point of view, this section 139 subsection 2 and linkage to audit committee is there. Similarly, you can also see in subsection 11 of section 139, this is with regard to filling of casual vacancy. Here also it has been very clearly mentioned, all appointments, including filling of casual vacancy of an auditor under this section, shall be made after taking into account the recommendation of audit committee. So first appointment, second appointment, rotation, as well as filling of the casual vacancy. In all such situations, recommendations of the audit committee is required when we look into these sections, as well as, and then audit committee is also duty bound to review that performance of the auditors, and based on that, they are supposed to recommend to the board who can be appointed, reappointed, or fill the casual vacancy. Coming back to Schedule 2, which is being referred in Regulation 18 with regard to duties of audit committee. Now, these are some of the provisions which I am going to tell you about. These are on internal financial control. As you can see that auditors are also required to give a separate report on efficacy and its continuity of internal financial control over financial reporting. A separate report is required to be made in terms of section 143. So here, from audit committee point of view, they are saying audit committee will evaluate of internal financial control and risk management system, review of management letters, whatever letters are given by the management to the auditors, they are supposed to look at it, whether the management has represented properly or is there any. Similarly, if some weaknesses has been pointed out either by the statutory auditors or by the internal auditors, then audit committee is supposed to look at it. Now, once again, coming back to the linkage of audit committee and auditors with specific reference to internal financial control. So what we have to do is that when we are looking into the existence, efficacy of internal financial control over financial reporting, the auditor must go through the minutes of the audit committee and look at those comments, how they have actually handled this issue, these 3 points, 3 duties, how they have performed with regard to that, and those references of these points in their minutes would help them in as an additional evidence for their reporting process with the specific reference to internal financial report over financial reporting. So, and then now, if you look at our essays, standards on auditing. So the very first thing which auditor does is to oversee the financial reporting process, how the information is gathered, how it is disclosed. And so he has to ensure that financial statements are not only correct, but also sufficient and credible. I think same responsibility has been given to audit committee also. And regulation 18 very specifically mentioned this particular clause, which is with regard to how financial reporting process is existing in the case of in that particular company's case. Now coming specifically on the financial statements, now you can see here very detailed responsibilities or duties has been assigned to audit committee. Now you can, whenever I am looking at these duties, you can map them what auditor is supposed to do. Now let's see. They are saying the audit committee will review with the management the annual financial statement and the auditor's report thereon before submission to the board for approval. And what are the specific particular references which audit committee is going to look at? Changes, if any, in the accounting policies and practices and reason for the same. Auditor also see the very first thing they say, is there any change in accounting policies? If yes, what are the reasons? Is there as per the accounting standards and all those? So major accounting entries involving estimates based on the exercise of judgment by management. So here, very important point. See, number of times it has been seen auditors pointing out that the estimates has been made based on certain assumptions which are not realistic, and then they point out those either in their reports or they ask the company to revise those estimates, positive or negative as the case may be. So therefore, same type of responsibilities are on the audit committee. So it means before auditor looks into it, supposed to look at what are those major accounting entries involving estimate. For example, if we say that in a public limited company, there is a provision for gratuity or for post-retirement benefits. So estimates, how they have been done, what are the, how management has taken up that, who's involved in giving those. For example, if actuary is involved, what are the assumptions which actuary has taken up for coming out with that particular estimate. All those are audit committee is supposed to look into those. Similarly, you can see that significant adjustment made in the financial statement. If auditor's findings are there, if auditor has pointed out those are then disclosure of related party transaction. I'm going to spend a lot of time on this aspect because auditors are also supposed to look at, and related party transactions are so important in our audit. Most of the scams which are being exposed now, you can see that the related party transaction route is the route for siphoning off or for diversion of funds. So from that point of view, all the related party transactions, their disclosure is very important, and audit committee is also required to look into those. And if there's any audit observation, because practically what happens that when financial statements are presented, along with that, the auditor also provides them their draft report, because ultimately auditor's report comes only on the accounts which has been adopted by the board. But in practically what happens that auditors complete its job and then they give a draft report, and that is looked at by the audit committee. I have my personal experiences where I have seen that though management has agreed to go ahead with the qualification, if they feel that auditor wants to give, so they have asked them to, okay, go ahead with that. But I have seen some of the audit committees that sometimes chairman or some member take the stand that we don't require, we don't want any type of modified opinion in the auditor's report, and whatever is required to be done must be done. So I have seen some of such cases where at the audit committee level, financial statements were required to be amended. So that is the importance of audit committee sometime, especially with the reference to the modified opinion in the draft audit report. So, and in addition to the annual financial statements, audit committee is also required to review the quarterly financial statements, because those are also submitted by the board, approved by the board. So before it is approved by the board, they are recommended by the management and the audit committee. So now coming to the fourth element of set of duties of audit committee is with regard to internal audit. Once again, I have clubbed them from auditor's point of view, that how these are important. And audit committee minutes, because audit committee is supposed to look at these points, and if they have dealt with and there are certain observations which are recorded in their minutes, then those are very relevant for auditors. So that is the very important linkage between auditor and audit committee. For example, it requires that audit committee will review the adequacy of internal audit function, and they would look into the structure of audit department. Are there sufficient staff, and whom they are reporting, and what are the coverage, and what is the frequency of their reports, and all those aspects. And based on that, they would be taking a call. Do they require some improvement, or accordingly their minutes would have that kind of observation? What do they want from them? And similarly, if there are certain significant findings, then audit committee is supposed to discuss with internal auditors and ensure that those are taken care of. And so follow-up action would also be there. And this is again a very common agenda for audit committees, where they carry forward internal auditors' findings, because ultimately whatever their findings are, they require some time to rectify. So from that point of view, this agenda item I have seen in most of the audit committee, this internal audit findings being followed up by the audit committee very, very regularly. And to review the finding of any internal investigation by the internal auditor to matter where there is suspected fraud. Sometimes it happens that if there is suspected fraud, board itself asked internal auditors to go deep into it, sometime very secretly, sometime openly, that, and then they are supposed to give the findings, and audit committee is supposed to look at those findings. Now you can see from these three important points that how these are relevant to auditors for their audit process. So it means, what I'm trying to make point here is that since audit committee is mandatorily required to look at these points, their observation on these points, which would be there in the minutes of the audit committee meetings, are very, very relevant to statutory auditors. Some other matters which audit committee is required to give is the why there are substantial default in the payments to the depositors, debenture holders, shareholders in case there's a dividend declaration, or in even the case of creditors. And these days, MSME payments are also being looked at by audit committee very, very seriously. So scrutiny of intercorporate loans and investments, and subsidiary companies. Now, if you look at these points, now auditor is also supposed to virtually look at all these payments. And in fact, in Caro, there are specific reporting requirements. So if there is a defaults in payment, those are required to be made. And then, of course, once they are not paid for a very long period, and it's after the specified period, they are supposed to be deposited in some investors fund or something like that. And similarly, on the intercorporate loans and investment, now in Caro, there is a very massive reporting requirement. So it means that once again, coming back to the same, I'm just repeating all those points that audit committee looks into this, and auditor is also required to look into these areas. So these are common, and therefore the interaction with audit committee and the statutory auditors is very, very important. Matters required to be included in director responsibility statement. Of course, there is a going concern. All those matters are there. So how they have dealt with that aspect. So again, audit committee minutes would reflect that. And coming to the listing and other legal requirements relating to financial statement, and use of funds, application of funds raised through the issue, which I mentioned earlier also. So that audit committee is required to report that. So section 177, regulation 18 are also requires this. So this is very important from investor protection point of view, that amounts has been used, amounts which has been raised through public issues. Those are used for only specific purposes which are mentioned in the offer documents, and auditors are also now required to give a specific comment on this. So from that point of view, we can see the synergy. Audit committee looks into it. Auditors are also required to look into it. And the last point, and the most important point from my perspective, is the duties of the audit committee under regulation 18 with respect to related party transactions. And of course, there are requirements under section 188 of the Companies Act, and auditor is supposed to give a specific comment that provisions of section 177 and 188 are complied with. So from that point of view, and another point is that from any fraud perspective, if auditor wants to look into that aspect, there also this is very, very important. So related party, as I mentioned, that this is one area which has been used extensively by the promoters to siphon off the funds or to divert the funds, which result into sometime closure of those companies also. There are a number of such cases in front of us. So all related parties, the regulation 18 requires that all related parties actions shall require prior approval of the audit committee. Then approval of any subsequent modification with related parties also required. And of course, section 188 requires that certain related party transactions are to be approved by the board. And then there are also provision for certain transactions when they exceed a specified threshold, they are required to be approved by the general meeting also. So those are section 177 requirement. But audit committee duties as per regulation 18 is that how those approvals are given, and prior approval is required. Audit committee can grant omnibus approval, which is normally valid for 1 year. And then they are also supposed to prescribe and to look at on quarterly basis how that omnibus approval was given, whether the transaction has been entered into correctly as per the terms mentioned in those omnibus approval, which has been given once and at the beginning of the year itself. So these are the duties of audit committee with respect to related party transaction. Once again, looking into the importance of related party transaction. Now, I think this I have already mentioned to you that most of the high value frauds have happened, and where use of related party transaction is was quite apparent and quite visible. So in most of the cases, the fraud are detected by chance or by admission of the perpetrator himself, when there was no mean left to continue the cover-up and not the statutory auditors. So in most of the cases, statutory auditors, I mean, look at the case of Satyam, starting from Satyam itself, where how this related party transactions were used, and ultimately the promoter has to explain, because the situation came where he had no choice but to disclose it. So, but auditors were not looking into those aspects for so many years. Anyhow, that's a different point. But point is that related parties transactions are important, and so these are some of the areas where frauds in related party happens. We can and section 188 deals with certain transactions, whether it's sale, purchase, supply of goods and material. I think these are also, now one can explain that. But only problem which I feel in section 188 is but one particular in subsection 1 itself. Sorry, in there is a proviso to subsection 1, where it says that nothing in this section applies to transaction entered into by the company in ordinary course of business, other than those which are not on arm's length basis. So these two terms, in ordinary course of business and on arm's length basis, these are two terms which again are very, 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 very dicey. And in fact, as per though section 188 deals with all kinds of transactions, the LODR talks about the significant related party transactions, and there is a threshold based on which they classify them as a significant related party transactions, and auditors is supposed to, or audit committee is also supposed to look into those aspects. But the point which is important here is the ordinary course of business and at the arm's length basis. These terms are not defined in the Act. Only thing what we have to see is how practically is it is to be interpreted. So normally what we say that ordinary course of business implies a continuous activity in carrying out a particular trade or vocation. And activity should be a substantial part of the business of the company. And anything done within its object clause should be treated as ordinary course of it. I mean, these are again references which can be examined in looking into whether that activity is considered as ordinary course of business. Similarly, arm's length basis has also not been explained in the Companies Act. So we have to look at other statutes to look at the basis how arm's length transaction is considered, and what is considered as arm's length basis. For example, under the income tax, we have associated enterprise, and see the basis how arm's length price is determined. So those are some of the methods which are also looked at from Companies Act point of view also. And but an additional point is that if they are unrelated, there is no conflict of interest. That conflict of interest part is also important one. So I think these are duties of audit committee. These are okay. So far as LODR is concerned, they have, as I mentioned to you, they have specified that only those related party transactions which are material, only those are to be looked at. So Regulation 23 deals with all those all those explanation how what are those considered as material, and what are the steps to be taken. The very first step taken is to be the company must have a policy on how those materiality, the material related party transaction will be dealt with. So they have to decide the threshold, and that has to be approved by the board. Once again, material word, since it is a relative term. You cannot give a rule based that amount exceeding so much is material, because it depends on company to company. So therefore, what is material? Threshold is to be decided clearly by the board of directors of the company, and based on that, and then they have to review it at least once every 3 years, and then accordingly determine what is material for them, looking into the overall financial transactions in the company, size of the nature of the stock, nature of the transactions, and all those things. So Regulation 23, as I mentioned earlier, it requires that all related party transactions are required prior approval of the audit committee. And of course, they can go for omnibus approval, and then those are to be looked at. So a transaction, Regulation 20, materially related party transaction. Now, if we look at this exceeding rupees 1,000 crore or 10% of the annual consolidated turnover of the listed entity as per the last audited financial statement of the listed entity, whichever is lower. I'm sorry, I mentioned about that these limits are not there, but these are there. So a transaction with a related party shall be considered material if the transaction to be entered into individually or taken together with the earlier transaction which has entered into during the financial year exceeds rupee 1,000 crore or 10% of the annual consolidated turnover of the listed entity. So that is the threshold for material related transaction. Now, when we come to the related party transaction, we have to be very careful that though LODR is talking about materially related transactions, but you have to comply with, the company has to comply with, the auditor has to look at compliance of section 188 also, where the thresholds are different. So auditor has to, as well as the audit committee has to look at related party transaction in such a way that not only Regulation 23 of LODR is complied with, but provisions of section 188 are also taken care of. But in spite of all these, I would say provisions which are being made, and all the duties which are being assigned to audit committee, still a lot of frauds are happening through related party transaction. And in fact, a very interesting study can be seen. This is the old 2020 study which I just happened to look at. Corporate governance scores by IIAS. This is an organization which has been promoted by various financial institutions. So it looks into corporate governance in listed entities, and their reports are used by those members who have promoted this particular entity. So what they have found out, that for boards that are focused only on compliance, there are enough regulatory loopholes in the related party transaction regulations that continue to allow financial leakages. So as I mentioned to you, that one proviso which says that at arm's length basis and in the ordinary course of business, that itself has proved to be a loophole in regulating related party transactions, not defining or not having very much clarity on what is in the ordinary course of business and what is arm's length basis. So then these are areas where there are a lot of scope for for management, those who are unscrupulous people there to manipulate there. So in recent instances, companies have taken decisions that are squarely in the promoter's interest at the cost of minority shareholders, and such decisions have skirted the need for shareholders' approval. So majority they can do. So what they are trying to say that so far as related party transactions are concerned, the culture has to be, or sometime maybe there is a demand for harsher provision with regard to related party transactions. Coming to the rights of audit committee, again, coming back to section 177, which is relating to audit committee, subsection 5 and 6. These sections say that audit committee call the comments of the auditors about internal control system, the scope of audit, including the observations, audit, and review of financial statement before their submission to the board, and may also discuss any related issues with internal and statutory. I think this I have already explained to you. These are reverse side or the other side of this is obligation on the auditors to provide them, and the rights of the audit committee on the one side, and then obligation on the audit committee from regulation or LODR point of view. These are very much in sync, and from that point of view, auditors auditors get a lot of help from audit committee reviews, audit committee minutes, that how audit committee has performed. If audit committee has not performed, that itself becomes a very tricky situation for auditors, and they have to looking into their what would say standard on auditing, where we are looking into the risk aspects, so that risk aspects get aggravated in those. And if audit committee does proper work, a lot of issues are clarified in their minutes itself, and then auditor can take some kind of additional evidence from the audit committee how those aspects has been taken care of. Audit committee shall have authority to investigate. They can even obtain professional advice from external sources and have full access to information contained in the records of the company. Number of times it has been seen these days that we have seen Auditors can also appoint a professional, take advice, and similarly, audit committee is also now empowered through the section that they can also obtain professional advice. See, chairman committee of the CLCG, he was talking about expert opinions. In most of the cases, these expert opinion references or application, or I would say these applications come to the institute from audit committees of some of the listed PSUs. They don't want to take any risk. They say take an opinion from professional bodies like ICAI, and based on that, and sometimes even CAG also asked the audit committee to take advice from the institute on if there is some technical matter. And so that these are the powers of the audit committee, which is emerging from section 177 itself. Regulation 18 again also gives a lot of rights to the audit committee. Audit committee at its discretion shall invite the finance director, or head of the finance function, internal audit head, or a representative of statutory auditors, and any other executive to present the meeting of the committee. Most of the time, audit committee, we have seen there are specific agenda item where they interact with the director finance, internal auditor head, or maybe statutory auditors, and other finance executives in the company itself. And they ask all the related questions which they are supposed to as per the requirement of regulation 18. And number of times we have seen that audit committee, without the presence of executive of the listed company, they meet even with the within themselves or with the auditors, with the internal auditors. And like regulation 18 requires that at the annual general meeting, chairman of the audit committee will be present and will answer the shareholders' queries with regard to financial statements. So they have powers to investigate within the terms of reference to them. They can also take professional advice. So virtually the same as I mentioned to you in section 177, subsection 5 and 6. So you can see here that regulation 18 also provide those those powers to the audit committee. Now, looking into what are those questions which are relevant to the statutory auditors with respect to audit committee and their interaction with internal audit. So what you would be looking at when you are looking at the minutes of the audit committee. So you would look at whether the audit committee consider the independence of internal audit unit. Does the audit committee consider the scope of internal audit, and how the report has been, to whom it has been, what is the professional expertise, standards have been followed or not, then who has reviewed the internal reports, what is the management response, and how those deficiencies has been taken care of. And these are the points which you would be as a statutory auditors looking into the asking or I would be expecting from the audit committee to answer these. So if audit committee has not dealt with, so it means then you have to seriously and more vigorously with more skepticism, you have to look into these aspects to really assess whether internal audit has been carried out in a proper way and effective way. Similarly, with regard to internal controls, what type of information statutory auditors would be looking from audit committee? So it would look into whether the audit committee consider that there's a code of conduct, anti-fraud, anti-bribery policies are there. So that would will make, of course, these are the points which auditors generally also looks at while carrying out a audit, because these are covered by the one or the other standards on auditing. So, but looking at from the point of view of audit committee, because audit committee is the committee which is meeting frequently with the management and with the those who are charged with the governance, and therefore what they have noticed, what they have during the year, throughout the year, what are their observations, those are very important from to the statutory auditors. So whether these are their code of conduct, anti-fraud, anti-bribery policies, and how whistleblowing mechanism has been established under section 177 requires that also, whether it is functioning satisfactory, how the complaints has been dealt with. Of course, auditors are also required to report that, but here we are talking about from audit committee point of view, because these are the points which audit committee is also supposed to look at. Then looking into the entire internal control, whether it's robust or operating effectively, and system or internal reporting gives early warning of control failure and emerging risk. This is one area which I would say from internal control point of view is very, very important. There is no justification, or there is no, I would say, use if something has happened and then it is pointed out. Early warning signals. What are those checks and balances which the company's internal control mechanism has put into place where early warning signals are there? For example, if you look at in the banks, there are financial statements of borrowers, which is called SMA 0, 1, 2, 3. So those are the accounts where defaults is at a very early stage, but that gives an indication that these are the accounts which have to be looked at so that they don't become NPA. Similar, I mean, just one example, there can be n number of examples, early warning signals. And in fact, in that same reference, you can see a very interesting circular issued by Reserve Bank of India, where they have given what are the early warning signals. And those can be used in our, regular audits other than bank also. Those are relevant for them also. On the financial reporting part, I gave you a picture, the specific requirement of the audit committee, what are they supposed to do, what are their duties. So from that view, I'm just creating this a kind of a audit checklist which auditor would be using. So while looking into the audit committee's minutes, it would see whether the audit committee has been the first draft has been seen by the audit committee before external auditors commence the audit. Now, this is again an important point. And audit can be started only when the company has already prepared the annual accounts. Now, audit committee not only looks at the draft final annual accounts, but also looks at the first draft of annual accounts, which are actually presented to the statutory or external auditors to when they commence the audit. And then sometime it is a very good idea to look at the subsequent adjustments which has been made during the course of audit, and that sometimes gives a very interesting information how audit has performed, what are the deficiencies which has been pointed out, has been by the audit team or even by the management itself. So so that's one part. Has the audit committee must look at that, and that should be, auditors should be looking for this information in their minute books. Does the audit committee examines the financial statement auditor's report? That is a subsequent part. And qualifications, how they have dealt with, and if there is any change in accounting policy. Sometime the accounting policies, there is a change, but it has not been intimated to the auditors. For example, if you let's take the case of, in the case of inventory valuation, instead of cost, which is based on FIFO, instead of that, weighted average cost has been taken. So that has been changed during the year. So sometime it is, so audit committee would also be looking into, is supposed to look into it. And sometimes these type of important information would be available to the auditor from the audit committee aspect. And these questions can be put by the auditors also. I would be referring to some of the essays also where these aspects are covered. One more area where interaction of statutory auditors and audit committee very specifically is pointed out in the Companies Act is Section 143(12). It has to be read with the Rule 13. Now here you can see, as you very well can recollect, that subsection 12 is with regard to reporting by the reporting of any fraud or suspected fraud by the auditors of the company, if they happen to know, they have reason to believe in the course of the performance of their duty as auditor that any offense of fraud involving prescribed has committed, then committed in the company by its officer and employees, then auditor is supposed to send the report to the central government in the manner prescribed. And for that, you will have to look at the Rule 13. Rule 13 has divided this reporting into two parts. One, a threshold has been mentioned, that if the amount involved is, or amount expected to be involved individually is 1 crore or above, then a different process is there, and otherwise a different process. So let's look at the first, where the amount is exceeding rupees 1 crore or above. Then the auditor shall report the matter to the audit committee. If audit committee is there, it means if it's a listed public company, or if it is a company which is to which Section 177 applies, then auditor has to report that matter to the audit committee, and this has to be done by them within 2 days of knowledge of his fraud, and they would be asking their reply on observation within 45 days. And once the reply is received from the audit committee, or if it is not received both ways, then within 15 days from the date of receipt of such a reply, or after the expiry of 45 days, if a reply is not received, they are supposed to send it to the central government. If reply is received, then from the audit committee, then along with that, that reply is also required to be sent to the central government. And in the case of those frauds or expected frauds involving less than rupees 1 crore, then auditor is supposed to report the matter to audit committee, and again 2 days with the knowledge, and he shall report the matter that what is the nature of fraud with description, approximate amount involved, parties involved to the audit committee, and audit committee will then take the action further. Now, I may be coming to the last leg of my today's deliberation. And that is very important one, since we were talking about the relationship of auditors and audit committee with reference to quality of audit. Now, let me draw your attention to some of the standards on auditing. And first of all, the term which is used in our standards is management and those charged with governance, TCWG. What is that? First of all, if you look at the definition of that, it says that the person or organization with responsibility for overseeing the strategic direction of the entity and obligation related to accountability of the entity, they are considered as those charged with governance, right? So first, try to understand this point. If you look at virtually across the essays, you will see that auditors are required to communicate with the management or those charged with governance, whatever is applicable. So those charged with governance, I have given you the definition, which is there in the glossary of terms. You can see this definition. Now, how it operates? Let's look at Essay 210. Essay 210, agreeing the terms of audit engagement. If you look at para 9 of Essay 210, it says the auditor shall agree the terms of the audit engagement with management or TCWG as appropriate. Audit engagement letter would be is the germane of this aspect, and Essay 210 gives a lot of draft of audit engagement letters. So auditor shall be agreeing. So auditor will say that you have appointed me an auditor and I have understood this and I am going to do this. So that's our agreeing the terms of audit engagement. And to whom they are reporting, to whom they are communicating to the management or agreeing to the those charged with governance, TCWG. Why I am raising this point? Because I am going to raise one very important point here, which I would request our past president, Dr. Mitra, to really consider that. So let me first complete my aspect on that. So let's now look at Essay 240. Essay 240 is the auditor's responsibility relating to fraud in an audit of financial statement. So this, what is this standard says, and how in this standard communication part with the TCWG comes up. It says that the para 40 of this essay it says that if auditor has identified a fraud and has obtained information that indicates that a fraud may exist on a timely basis, he is supposed to communicate that to the management or to the TCWG. So that is the second essay which requires us to communicate to TCWG or the management. So management is so board, below the board is the management, or sometime, so we are saying that board is above the management. And whether the question which I am going to raise now is that whether TCWG, within this term, whether audit committee falls. That is the point. So far the definition is concerned, it is not very clear. So maybe we can debate that though our provisions of the Companies Act, provisions of LODR, they require us to communicate, us means the statutory auditors, to communicate with audit committee, whereas our essays are talking about communicating with the either the management or those charged with governance. And the definition of those charged with governance is, to my mind, is not very clear whether it covers audit committee. So let's look at two more essays, then we will debate it further. First is the third one is essay 250, consideration of law and regulation audit of financial statement. So again in this essay, if you look at para 16, it says that the auditor shall request management or TCWG to provide written representation that all known instances of non-compliance or suspected non-compliance with laws and regulations which are applicable to the company has been properly disclosed to the auditors. Very important, because based on that, we are going further. So first of all, the consideration of law and regulation is important whenever an audit is carried out. So there also we are communicating with TCWG. And finally, the very relevant part essay which is on the audit evidence is essay 580, which is written representations. Here again, it says that a written statement, what is that management or TCWG believe that they have fulfilled their responsibility for the preparation of the financial statement or for the completeness of the information provided to the auditors. That statement is a first very important written representation which which auditors are supposed to take to comply with the essay 580. So I have given you 4 examples where the reference is either to management or to TCWG. Now, as I explained to you, personally, I feel that TCWG maybe requires to be further clarified that audit committee falls into this particular definition. Now, one very interesting feature which another development which I could see was this is a PCAOB, this Public Company Accounting Oversight Board, which is operative in US. They have one particular auditing standard, AS 1301, where they are saying auditors are required to, the heading of that is communication with audit committees. This standard requires the auditor to communicate with the company's audit committees regarding certain matters relating to the conduct of the audit. They are required to communicate with the audit committee to obtain certain information from the relevant to the audit, and to understand and establish terms of the audit engagement, and amended standard. These are, now if you look at these 3 requirements, these very perfectly match with what is the requirement of audit committee, or I would say that in this LODR requirement. And so I personally feel that maybe our institute or maybe NAFRA now should be coming out, either they should be defining the TCWG, or they may come out with some standard virtually on the same lines as AS 1301, where there are very specifically mentioned that communicate with the audit committee. Then I think this amendment, this standard has been recently amended by PCAOB and would be effective from fiscal year ending on or after 15 June 2025. It means it's a recent development. I think we may also should take up on something similar lines at our institute level, or maybe at our regulators level. So with this, since it's already 7:46, let us take some questions for next 10 to 15 minutes. So that would be a good idea.
Thank you, sir. Thank you. It was a wonderful session. That way, sir, we have thrown up enlightened various important aspects related to the audit committee, as well as the duties with respect to related party transaction with specifics, sir. And also with respect to the internal audit. And also you have touched upon the various common issues which come before the audit committee while doing the financial reporting. So, sir, we have received a lot of the queries on the same. So I'm just reading one by one queries before you, sir.
Sure. Let
Yes,
me
sir.
first close down
First
this.
query, sir, that has come across is, what are the compliances auditors check with the latest standards on auditing standards during the audit engagements?
I mean, I think in the beginning itself, the chairman of the committee mentioned that we have a set of standards on auditing. Those standards are mandatory. Each and every standard is mandatory. You have no choice whether it's a small audit or big audit. All standards are mandatory and have to be followed. So from that point of view, I would say that there is no choice with us so far as standards on auditings are concerned.
The next query that has come before us is, how has the technology changed the way audits are being conducted, sir?
Oh, that's very interesting question. In fact, if you look at, and then I think our institute has also started working in that direction. The audit quality, the Center for Audit Quality has taken up this task, and they have started providing some kind of a support to the practitioners, how technology can be used, how AI is another area, which is another technology part, which is now being used extensively for audits. So I think we cannot just see, there are a lot of repetitive work which this technology can eliminate. So, and then we can devote quality time on audit. So I would urge all the members, those who are not exposed to technology, that we must look at all tools, starting from let's say Excel sheet to the highest level, which is AI. Everything should be, we should be exposed to those type of facilities available, and we must be using them in our audit process. So since the preparation and presentation of financial statement has become very, very technology driven. Now you can see how companies are able to present their accounts, financial statements in just 3 days after the closure of the financial year. So it means that this is all technology which they are using. So auditors are also now supposed to have similar kind of tools with them, or processes with them, where they can work in those technology driven financial statements as well as internal control environments. And based on that, they should also be coming out that a processes where they can complete their audit without compromising with the quality in a very, very faster manner.
Right, sir. So next is, how does the audit committee help in managing risks for the company?
See, the audit committee and risk management is a very important. First of all, there is a risk in some of the cases, especially in the banks. Risk risk management committee is a separate committee, but for all the other listed companies, the audit committee looks into it. So how audit committee risk is, there is a risk assessment exercise. The audit committee looks into that. First of all, the very first step is, what is the risk appetite of a particular company? Risk appetite is meant to what extent we feel that, okay, if something happens within that range, it's okay, it's fine with me, we can go ahead with that. That is the very first step. And then based on that, how those risks, identifying those risks, assessing their risk appetite based on those, and then how to mitigate those risks if they are beyond those risk appetite. So these are 3-4 steps, and for which I have seen most of the cases, audit committees take help of experts to look into these aspects. They prepare the documents, proper risk assessment documents, risk mitigation documents, and audit committees are see, they ensure that these whatever their reports are there, whatever their suggestions are there, they are implemented. And this is the way how they are actually looking into the risk assessment part.
The next query is, what are the key components of audit documentation and how to ensure that it meets the requirement of SA 230?
So, okay, though this is not today's related topic, but anyhow, see, the very basic answer, I would say the simplest answer to this is that your file, your audit papers should be able to establish that you have carried out the work in such a way that the risk, the any risk of any misstatement has been addressed by you. So that is and then now this, on this basic one statement, you can look at your audit documentation. So first of all, starting from your review of internal control system to setting up the audit program, looking at determining the sample size, and based on that, all that has to be, and then work carried out by your team, review by the supervisor, then how those are communicated to the management or those charged with the governance, and what are their replies which has been received, and finally how they have been, if you are not satisfied with how they have traveled to the report. So right from the starting point to the report, that linkage, that entire that linkage should be there. It's like a like a necklace which you are wearing. So it takes you each and every bead, and then finally it makes. So your audit file should be like that, which proves, and of course then these days, in addition to the engagement review partner is also has become very important. And then on the top of it, or all the papers, there has to be a review paper where the review partner has gone through it. And so from that point of view, this is broadly, I would say, a step your file should prove. And these papers which I am talking about I have seen in some of the cases, auditors are putting so much paper in their audit files which are not relevant. Like those are just extract of financial statements of their clients. Those are not relevant. Relevant is there's a point which I have just mentioned. Assessment of internal control, audit program, sample sizes, samples, how you have determined that, how risk factor has been defined. Have you complied with all the accounting standards? You have verified that. How each and every audit or essay has been complied. So your SOPs on each and every topic, on each and every standard, has that been on the file? Has there any observation? Whether that observation has been settled? If not settled, are they being traveled right up to the reporting? These are the broad, and in fact, when we do a lot of peer reviews, this is the process which is required to be seen. And in fact, NAFRA, when asked for the working papers from the auditors of some of the companies, they ask for these type of papers only. They look for these type of papers.
The next question is, to facilitate peer reviews and quality control inspections, how an auditor maintains and organizes audit working papers?
Okay, very interesting point. So, Nishaji, my simple answer to that is, you cannot generate papers, audit file papers, at a later stage. It has to be done at the time of audit itself. The only time which you get is to manage the file, to put those papers in order. But at that time, you are not supposed to bring in new papers. That is the basic thing. I mean, this is the problem. We have seen that peer reviewers, when they come, they point out the new papers are just put into the file. That is not the point. I mean, when you present your file to NAFRA, they would tear you apart on that. No new paper can be, I mean, they even are very much careful about how the files has been placed, whether they are physical, whether they are on the on that electronic media, how they have been secured, that those are not changed, not altered, or something like that. So point is important that what was the initial point? What was that? I said. What was the question, Nishaji? So let me conclude with that.
Yes, sir. To facilitate peer reviews and quality control inspections.
Yeah. So first of all, just take this in mind that in peer review process, you are not bringing in new papers. And my suggestion to you would be, even if your peer review has not happened till date, you look at the questionnaire. Peer review board has created a questionnaire which you are supposed to fill in, and your peer reviewer is supposed to fill in. That is the best, I would say, document. If you can see that you are complying with all those questionnaires, you are able to answer those, so you can be confident that your files are updated and peer reviewer will be okay with it. So that's like a audit program for peer review. So look into that, and it's very exhaustive, very detailed information is there. Each and every aspect, there is a question, and each and every aspect has got 4 or 5 questions. For example, SQC1, there are 7 or 8 questions. So you see whether you have complied with those questions. So that will give the macro level. Then on each standard, they have mentioned how you have dealt with those. For example, audit evidences. So there's nothing new in peer review. You have to be very, very specific when you are carrying out the audit. You have to generate all those papers at that time itself. You cannot create additional papers just for the purpose of peer review. So just keep that in mind.
Thank you, sir. It was a wonderful session that you have a walkthrough over the important concept related to the audit quality, how it plays a critical role in ensuring the transparency of the financial reporting. So now over to Seema to give a vote of thanks. Seema?
Thank you so much, ma'am. Thank you so much, sir. And I'm sure our participants are feeling as enlightened as I am after this insightful webinar on audit quality, auditors and audit committee. On behalf of Chairman and Vice Chairperson of the committee and entire CLCC team, I extend my heartfelt thanks to all those who have attended this program. A big thank you to our esteemed speaker, CA Anil Sharma sir, for sharing your profound knowledge and expertise with us today, sir.
Thank you very much. And
I would also like to express my gratitude to all the participants who have joined us from different parts of the country. Your active participation throughout this session and the questions you have asked has enriched the dialogue and added immense value to this webinar. Thank you so much, sir, for your session.
thank you.
Thank you, sir.
Thank you.